Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, November 4th. We're seeing a muted reaction on Wall Street to a mixed report on the labor market. The U.S. economy added 80,000 non-farm jobs to payrolls in October, fewer than the 90,000 expected. However, job growth in August and September was revised sharply higher. The revisions now show 104,000 new workers added in August, up from 57,000. And September hiring was revised from 103,000 to 158,000. In addition, a separate survey showed a slight decline in the unemployment rate to 9% even. Unemployment had been expected to hold steady at 9.1%. While the data do signal that the economy is improving, it's still adding jobs at a historically low pace. Economists say we'd have to see job growth of 250,000 a month for more than 2 years to bring the unemployment rate back down to its pre-recession level of around 6%.
Stock futures did get an initial boost following the employment report, but they've now given up those gains. Investors instead continue to focus on the sovereign debt problems plaguing Europe. The yield on Italy's 10-year bond keeps moving higher this morning, rising further above 6% on fears that that country will be the next domino to fall. The European debt crisis is the top item on the Group of 20's agenda as they wrap up their two-day meeting in Cannes, France. The Wall Street Journal reported that the G20 is considering ways that the International Monetary Fund can help Eurozone countries bring down their borrowing costs and pay off their international obligations. As concerns about Europe come back to the fore, the region's shared currency is giving up its earlier gains against the dollar, and U.S. Treasuries are making up some lost ground. Meanwhile, oil prices have turned lower and are now trading back below $94 a barrel. Stocks across Europe had gotten a boost yesterday from the decision by Greece's prime minister to scrap his plan for a public referendum on the country's latest bailout. But the optimism over that move seems to have been short-lived.
In corporate news, Jon Corzine has resigned as CEO of MF Global. Corzine was formerly the head of Goldman Sachs and also served as the governor of New Jersey and represented the state in the U.S. Senate. His resignation comes as regulators ramp up their investigation of the broker-dealer's finances. MF Global suffered huge losses on risky debt investments, and millions of dollars of customers' money has reportedly gone missing. The firm was forced to declare bankruptcy earlier this week after a proposed sale to Interactive Brokers Group fell through. In a statement, Corzine expressed great sadness about the company's downfall, and MF Global said he would not take any severance payments.
As MF Global faces its final days as a publicly traded company, another firm is making its debut. The online discounter Groupon began trading on the Nasdaq Global Market today under the ticker symbol GRPN. The company priced its initial public offering at $20 a share, above the expected range of $16 to $18, and added 5 million shares to the deal last night. The pricing signals strong investor demand and gives Groupon a valuation of about $12.7 billion. And finally, one of the biggest stock movers of the day is Starbucks, up 7%. After yesterday's closing bell, the coffee chain posted a 28.5% jump in fiscal fourth quarter profit and raised its quarterly dividend for the third time in the past 18 months. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.